Hey traders, hey, it's Greg. Sorry I missed you last week. I was on vacation. I did a little bit of touring in Arizona. As you can see here, that's the Theodore Roosevelt Dam. That was pretty cool. Here's the other side. Anyway, that's my excuse for missing last week. If we look real quick at what happened last week, we had some pretty big things happen. We had consumer price index, core CPI, all that stuff, retail sales, PPI, which actually did some interesting things. Of course, we have these job claims and such like that. So, without getting into the really nitty gritty with that, I'm going to back out on this 5 minute, and you can see really what happened over. Oh, 1, 2, 3, 4, 5, 6, 7 trading days, which would put us back to, wait, no, must be around here, back to Monday, right? So if we look at this as a 5 minute time frame, we're actually higher now than we were last Monday. So let me zoom back in on today. Bear with my super fast trading view. You can see what really happened today. A little bit of chop. Looks like support and resistance lines are holding well, but we are up. 85 basis points. That's nothing to complain about for a bear market. Okay. With that being said, I'm going to jump back into this screen, which is the VIX. Again, you can only see my picture down here. Not that you care too much. Um, I want to move it. Uh, anyway, it doesn't allow anything but on one certain web browser. So anyway, the VIX here is an interesting pattern coming. Is this a bull flag? What is this? Is it just a chop? Is it hard to tell? This is on a daily on the VIX, but I did want to show that just because I thought it was just an odd pattern. I don't expect this to explode. It looks like it wants to. Now you got to remember, we get over this 40, I call it the panic zone. That generally is a sign of an event happening, a war, or who knows what. We get up into that 40, we're going to see some crazy stuff happen in the S&P 500, and that's usually considered a capitulation event, and also usually the sign of a recession beginning. So we're not there yet, but some weird stuff's going on in the VIX. Threw that out right away. Let's jump and look at financial conditions. Again, I'll have a link to this so you can follow financial conditions over since I originally created this chart. You look down below in the trading view stuff. You can follow this. If you're watching on YouTube, please like, subscribe. I really appreciate it. If you're watching on the trading view, I think it's called a thrust or a boost or something like that. I'm not really sure what that does. But I'm trying to increase my presence. I don't make any money on this. I'm just enjoying it, and I'm fascinated with the market stuff. So one interesting thing here, these if you look at the financial conditions, which is all these candles, keep in mind that this is an inverted chart. So green means down and red means up. And I do that just because I shouldn't say green, I should say blue here. The green line chart is actually the S&P 500. So you can follow that as financial condition eased. They go, the S&P 500 went up. When they tightened, it went down. It dropped drastically recently. I think a lot of that has to do with the bank fiasco with Silicon Valley Bank. I won't get into that in great depth here because I think everybody's heard about it. But we're starting to have some banking failures, which is not good, and that actually creates tightening conditions on its own without the Feds having to step in. That being said, I've read a lot of articles from the Feds doing a pause all the way to a 50 still. They're basing it on the ECB, Draghi, and all that, or whoever is in charge over there. I don't know. One thing I can tell you is financial conditions have eased and now they're consolidating. So that's just something important to remember because as financial conditions tighten, that's a headwind to the S&P 500. jump real quick at the monthly. For those of you that have been watching me for a while, the yellow trend line here is a pre-COVID trend right about here. That's that March 20th COVID hit, and then we had to blow off top as we got way too much stimulus money in the market. There's still way too much stimulus in the market, in my opinion. It's just not in checks you get in the mail. It's in all sorts of money they allocated that just really hasn't been spent yet. WIRA programs. I mean, the amount of programs they created out of that was just ridiculous. Makes me question some of my affiliations to some of my politicians. Anyway, I guess they're not all economists, but they probably should trust and have good ones. Anyway, okay, I'll move on. So anyway, so we have had this rooftop blow off. I've been watching the fib on this. I was really thinking we get back to this 618. That's why I have it real big here, which would drop us right in the pre-COVID trend line. But really, we hit the 50% and bounced, and we've done nothing but chops since then. I wouldn't say we've ever really made it fully out of and closed on a monthly on this trend line. Even here, where it looked like we were gonna, we actually pulled back and closed within. Right now, we are outside of that trend line, the rooftop pattern. But you can see that's just a big doji, and we still have, I don't know, 10, 11 days in the week yet. All right. That being said, let's jump over to the SPY weekly. This is an interesting pattern. Again, for those of you that have been with me for a while, white channel is the pre-COVID. Here's the COVID. I fibbed it up. So these should be the same fib retracements. But what we've noticed here is we had this blow off top. We did do this expanding wedge. And then we started channeling up. We actually started having a little bull market rally here in this bear market. Although you'll see this pink line here is the anchored VWAP to the beginning of the year. You see it's just fought it. It just really can't. Even now it's still fighting it. So maybe our expanding wedge, which technically I have it in red, but it could be considered bullish instead of bearish if expanding wedges are a little shaky compared to a flag. But anyway, it did try to get a little bullish here, but then we dropped on some of this recent data and the bank collapse as well. So anyway, that's really what I have to say about the weekly SPY. The daily, again, this is crazy. Same sort of thing with the channel. I do like to mark all of the important days. You'll see all the Powell howls in here. You can see since the beginning of 2022 when we started our bear market, how things chopped through all the Powell howls. Powell howls when he has the FOMC meeting and he comes out and then he does the presser, and I'll just leave it at that. He has had a few successful ones in here, but not many. And then last week, what I really want to point out is we had our CPI on the 14th come out. We had an interesting big tail candle on that before, but then we ran back up on that, dropped down. This is a daily, by the way. Ran back up, dropped back down, ran back up, and then we went in our court. Remember, we had OPEX last Friday. Okay, so that took a lot of the underlying conditions of the market, the floor that's based on option expirations out, and it tumbled pretty good. Now we had a good rebound day the next day. If you see, I started drawing a pennant pattern in here, which ironically comes together on the Powell howl of the what do we have, the 22nd of March. That's coming up. I think that's Wednesday. Anyway, I think they start their meeting Tuesday, and then on Wednesday they come out with their announcement and their presser and all that stuff that scares everybody and it generally makes the market have some crazy moves. I think we talked a little bit about the SPY 5-minute. I'm not going to go back into every one of those days that had an event. At the end of the day, we're literally doing better than before. Just in case you're worried about what would happen today, I'm watching the tick. Below the tick is every time we hit 1,000 orders on the New York Stock Exchange. I consider that a buy program. A lot of times that's institutional, and the same with the negative. And I set up alerts, and then I throw a Bollinger Band around it so I can kind of see how it trends throughout the day. You can see we were a little low all day today, but the SPY itself actually did okay. Right now, I would say we're almost 1% up. Oops, excuse my French. So that's pretty good stuff. All right, we're gonna jump back on the VIX and talk about some of these command and control in here. Some of the stuff that we watch, like the Kospi. Whoops. Okay, the Kospi. That is the South Korean exchange. So one thing we'd like to watch this for is a lot of chips come out of there, a lot of technology. So and then we have global problems with China over there too. So I watched the Kospi at night. It feeds into the morning, which feeds into the DAX, which is the German powerhouse over on in Europe, and they do a lot of manufacturing in Germany. So you can see we've been holding these trend lines pretty good. We drop below it, it's going to come back and retest about 15,000. We got some momentum down, but it's ready to turn. I think that maybe we're okay here. I wonder if there's speculation in the markets about the Fed's actually pausing or maybe only doing a 25 basis hike. Well, we were pretty guaranteed a 50 basis hike up till before I went on vacation, frankly. And now it could be nothing. Just because of that Silicon Bank fiasco, which caused 4 or 5, the dominoes just started tipping. And I find it interesting how other banks are actually bailing out the banks. The Fed said they'd never bail the banks out again for poor business practices, and yet we're bailing them out again, right? And so what we've seen is, I hope you can see this on here, all of these are the different treasuries. Now they're up today, but if you really look at them, I mean, a lot of these were above 5% just a week ago. So a little bit of snapback going on today, so that's kind of nice to see. I like to look at IWM. It's a good leading indicator where the markets want to go. The IWM small caps or the Russell 2000. It's the ETF tradable. So what do I see here? Bull flag that failed. Now just a bunch of chop. Dow Jones Trust, canary in the coal mine. Good one to watch to see what's coming up ahead. Again, a lot of chop. I don't see anything that's jumping out at me. The Dow, all of you have probably heard about the Dow. The SPY, well, we go into that in a different chart. The Qs we talked about. These are some of the cash indexes and whatnot. Let's jump into the spread. So if we look at the 10-year minus 3 months, it looks really bad. I mean, we've been inverted since the 8th of November. If we look at the 10 minus 2, looks better. It jumped up, but that's because of that banking fiasco and some of the nonsense that happened there for the bailout, in my opinion. So that was back in the 6th of July, that inverted. I wonder if this doesn't drop back down here. One other thing I like to point out is the SPHB over in the SPLV index and a ratio. And really what that is growth to value. One thing of take note, since December, we took off on growth, which makes sense if you look at, the 11% or 14% or whatever the NASDAQ has gone up compared to the 1.4% in the S&P 500. And I don't even think the Dow is positive, but anyway, you can see that's tapered off now, and value is starting to take over growth. So that'll be interesting to see what happens there. One other thing I like to show, this is on the Chicago Fed for the national financial conditions. This is another way to, when I showed you that IEF LQD with all the colors and inverted stuff. This is it's the Cleveland or Chicago Fed's version of that. to be in a good financial spot, you got to get above that zero, right? So, or you want it to go down. I'm sorry, I'm telling you the wrong way here. So we're heading in the right direction as far as financial conditions. I think I have that inverted in my head because I invert that other chart. This is the future Fed funds rate, right? Now we're at 4. Where are we at here? 4035. Now we were over 5% up here, and that was literally the 8th a week ago. So you can see how much that people are thinking they're going to cut. Boy, that doesn't that look like a huge bear flag or pennant? I don't know. That looks too slappy to me. I don't like it. I expect we see some recovery in that. One of the things that, just some stuff we looked at last week, the employment change. This is a monthly. So this is ADP's employment number. So 242, pretty flat lined here. I thought that looks pretty good. People don't like it. I think it looks pretty good. Continuing jobless claims. I mean, if you really look at that, that's low. You have a strong job market. Initial jobless claims, I mean, these are at all-time lows. United States, here's the producer price inflation. This one freaked the market out a little bit. So I'm not really sure why. United States core PCE. A lot of people watch this. The Fed watches this. So this still looks high. So I think the Fed's work is not over. It'll be very interesting this week to see what they do. Here's year over year. And core inflation rate year over year. So you can see it pulled back a little bit, but it's still pretty high, right? Our interest rates month to date. Okay. Oops. Let me get that back to daily. This is back to our Fed futures funds. Sorry, I'm jumping all over the board here. Look at the 2-year. Wow, did that change? 10-year. Again, these are all giving up gains. Mortgage rates are on the rise, but they pulled back a little bit too. I mean, they were up over 7%, and I'm in the real estate business, so I was literally getting offers on buildings that were in the 7.25 range. So here we are getting back up there. We'll see how that works. There's just such a shortage of inventory, and I check every day. And I look at duplexes and smaller apartment buildings and single family homes. And there's just such a shortage that they still command high dollar. It's pretty amazing. I don't go very much into commodities. I mean, we can look at oil. That's been dropping pretty steady. Oops, I don't know why this goes off auto all the time. So that's that's been falling. Gasoline prices have been falling. Gold, oh, look at that, almost 2,000 again. Makes me go cash my jewelry in. Anyway, so that being said, I think the last thing I want to look at is advanced decline. Oops. So the advanced decline ratio, you see a lot of red there, a lot of declines. So at the end of the day, I'll flip it back to the VIX so I have it where I want it for future reference. That being said, let's look at this week's economic calendar. Let's see, I got one marked up here. So we have existing house sales tomorrow. Again, I'm a real estate guy, so that I probably may pay more attention than other people in that. But Wednesday's the big day. Also the FOMC, they actually start their meeting tomorrow. We don't get much news though till the next day, 2 p.m. They announce the hike amount. 2:30. That's the presser. That's when we usually have exciting stuff. Anyway, then we get into Thursday. We get some new home sales. The ADP jobless claims. That's always interesting to see if that chart changes. PMI composite flash. I just like to look at it. James Bullard speaking. Let's see what he talks. If he just talks down the market again. He's just such a grumpy old man.